If you're looking for a reason to panic, go watch something else. Investor Beat starts now. Thanks for watching. I'm Alison Southwick. The Dow started the day in a good mood, but took a turn for the worse after home sales data came in lower than expected. Joining me in studio is Morgan Housel and Taylor Muckerman. Today is offering little solace after last week's sell-off when the Dow fell 3.5%, its worst weekly drop since 2011. Of course, this is leading some to wonder if this is the beginning of the end of what has been a glorious 5-year run. So Morgan, do we know what drove last week's sell-off?
No, I'm always hesitant when people say the stock market is falling because of X, unless it's something really obvious like we had in 2008. But when you have a stock market pullback of 3 or 5%, it's hard to attach meaning and say stocks are falling because of this. Stocks might be falling because that's just what they do sometimes. You know, if you look back at a long range of history, the S&P 500 falls 10% every 11 months. It's pretty common. So even this 3 or 4% pullback, whatever it is now, that's par for the course. So.
Yep. So Taylor, all these people who are saying this could be the start of the apocalypse,
right.
Who are they? And I guess I shouldn't be listening to them.
Yeah, well, you have a lot of economists talking about emerging markets potentially slowing down. You see a lot of turmoil, both through the government and just regional unrest in a lot of countries. As China goes, so do a lot of other emerging markets in a lot of people's minds. So if there's any talk of a pullback, which you did see exports slow down, but they're still growing at 4% out of China. But if you talk about companies, GE and the CEO, Jeff Immelt, they believe very strongly in emerging markets, at least right now. So whether or not the future looks bright for them, I do think that, you know, investors still have a lot to be thankful for.
All right, so the bottom line is it could be the beginning of the end. It could not. We don't know, right?
I think if you're a long-term investor, you shouldn't really be looking at what the Dow did today or last week. You should be looking at your own financial goals and what you're going to be doing over the next 10 or 20 years, and not what's going on with the Turkish lira or the Argentine peso. That probably has no relevance to your investing strategy.
Right. Your vacation plans.
Right.
Not your investing strategy.
Right. All right. Well, let's move on and take a look at some of the day's movers and shakers. Caterpillar is up today after beating analyst expectations for the fourth quarter. Construction sales bolstered plunging sales for mining equipment. Taylor, Caterpillar also is looking like 2014 is going to be pretty good, better than analysts thought. What do you think of the company?
Well, I like it as a global benchmark and how things are working on the industrial side. They changed their tune. 2013, they thought 2014 was going to be a little down. Obviously, they had a better fourth quarter than they expected, and hope that that carries over. The resources segment, which is arguably their largest, was down 48% in the fourth quarter year over year, so they're still struggling mightily with this. And with the likes of Rio Tinto, one of the largest miners in the world, talking about cutting $3 billion a year in capital expenditures for the next 2 to 3 years, their customers are pulling back, and that could definitely impact sales for the next couple. So I'm hesitant on this stock, but they did have some nice things to say about the global economy.
Facebook is down today despite the fact that analysts are predicting a 50% increase in revenue year over year when it reports earnings on Wednesday. So, Morgan, last week we saw that Princeton study that claimed that Facebook was going to lose about 80% of its users in 3 years.
Yeah.
So is that what's dragging the stock down today despite the good news?
I hope not. They did a good job with their headline, getting people to click on the story. I don't know how relevant that is to the company. But you said it yourself. Facebook, the company, is doing very well. Revenue could be up 50% in the last year. But then you have to consider, you know, the stock has done very well in the last year, too. It almost doubled in 2013. So anytime a business is growing slower than its stock, sure, you could get some pretty serious volatility in there. But I think Facebook, the business, is doing well. But then, you know, we have to talk, too, about whether Facebook young users, you know, people in their teens right now, are really going to be interested in this product over the next decade. That's really to be determined. I was reading a story recently about a social network called Ask FM, if either of you have heard of it. Apparently, it's very popular with teenagers. So I think older people like us, sorry, I'm calling us old, can look at Facebook and say, look, this is a great company, but it's really a question whether the next generation is going to have that same opinion, and that's to be seen.
Well, Sprint saw a nice little bump today after announcing it has expanded its 4G LTE network to 40 more markets in the U.S., including my childhood hometown of Idaho Falls, Idaho. So,
shout out.
Yay, shout out to the hometown. It feels like Sprint, though, is kind of playing catch-up here finally reaching Idaho Falls, Idaho, which is not that small of a town.
No, it's not. So it's good that they're finally starting to reach markets like that. They don't have their claim to fame about a 4G LTE network. You talk about some of the bigger competitors like AT&T and Verizon talking about how they're the fastest or the largest. Sprint doesn't have that yet, so they're working very hard at it. And with the importance of video and photo sharing now, the addition of unlimited data storage in the cloud for $5 a month is a nice boost for the stock, and I think that plays a large part in the stock being up around 6% today. I use Dropbox personally, so I don't know how much of a long-term advantage that's going to be, but it's nice to see the stock continuing to, or the company, continuing to grow its network on the 4G and 3G level.
Social media like Twitter and LinkedIn are down today. The reason? I don't know. The best thing I could find is that maybe they're suffering for the sins of Facebook, but I don't know. What do you think?
Both these companies did very well in 2013 too, so I think it's pretty normal that you would see a big, a decent pullback. Both companies, the companies are doing very well, and the products are incredible. So I think if you're a long-term investor, that's what you should be focused on, rather than what the stocks are doing on a day-to-day basis.
Right. Oh, that's going to cover it for the headlines. So let's take a look ahead. What is one stock on your radar?
It's DuPont. They report tomorrow. Nice conglomerate of chemicals and agriculture. I'm focusing specifically on their agriculture business. 60% of their R&D is dedicated to this. Monsanto had a pretty good fourth quarter year over year, although their seed genomics were down, which is where DuPont helps compete in that nature. So if they struggle, I'm going to be concerned about their R&D spend not really driving growth at the company.
All right, how about you, Morgan?
Yeah, I'm still keeping an eye on financial stocks, big banks like Bank of America. A lot of people are concerned that the market did so well in 2013, it's overvalued, everything expensive. Financials, I think you can look at and say these companies are still cheap by almost any metric you look at. And you look at the economy getting stronger, loan defaults coming down. For companies like Bank of America, this could be a pretty good year.
All right, well, that's all for today. For Morgan Housel and Taylor Muckerman, I'm Alison Southwick. Thanks for watching.